Hi there. Good morning or good afternoon to everyone, depending on what part of the country you are calling in from. My name is Ginger Bell, and I'd like to welcome you to the Finance of America Wholesale Fannie Mae HomeStyle Best Practices webinar. And as you're getting logged in today, I want to let you know there's a couple of different ways that you can listen to the webinar. You can either phone in to the phone number that's listed on your email, or you can listen through your computer. Because we do have so many people on this webinar, we do have everyone muted, but you can ask questions. And so a couple of different ways that you can ask questions. You can either type the question in the chat box, or you can type it in the Q&A box. And so I'm actually calling in today from Austin, Texas. I am at the MBA annual conference, and I'm actually sitting in the convention hall. So if you're hearing any background sound here, that's why. It's been a great convention, learning all kinds of great things. And if you're here and happen to be listening to the webinar too, give me a shout out for sure. So let's go ahead and do a sound check and make sure that you all can hear us and know how to ask questions. So if you can just type in to the Q&A box or type into the chat box. Let me know what part of the country you're calling in from today, and let me know how your weather is. I can tell you it's a very cool day in Austin, which is unusual. Normally it's a little bit warmer, but I think we're at about 50 degrees here, so not super warm. And so I'm not seeing anyone type in, so somebody please type in. Let me know that you can hear us.
Yeah.
So if you can just type into the Q&A box, type into the chat box, and just let me know you can hear us. Oh, there we go. Miss Sandra, thank you.
Thanks, Jill.
Okay, Jill, thank you. Okay, good.
Good.
London,
hey,
Kentucky.
You're in my neighborhood in Kentucky, man. London, Kentucky. I know where that is.
Yeah, okay, good. So, William, we are set, so they can hear us. So a couple of things. Today's Tuesday, October 29th. We're doing the HomeStyle webinar. And in November, we are going to do, William and I were just talking about, we're going to do RENOvember. So our focus in November is going to be about renovation home loans. And so we'll be having information coming out on all the webinars we're going to do in November on renovation loan products. And you can always find all of our webinar registrations at FAMU events. So www.famuevents.com. You can always go there and register for any webinars that we have coming up. We will have all the materials today for the slide deck that William is going through. I'm going to send in a follow-up email. I am recording this webinar, so we'll send a link to the recording. So if you can't listen, and I've already gotten several emails from some of you, I know you're very busy right now, saying, hey, Ginger, I can't attend the whole thing. Can you send me the follow-up or send me the handout? Yes, you will always get, if you register for a webinar, whether you attend or don't, we always send follow-up out to you. So with that, let me introduce Mr. William Brown. William is the National Renovation Sales Manager and has been doing renovation loans for a very long time, and is so proficient at everything, so passionate about the renovation loans, and I know so helpful as far as not only the information, but just answering questions and making sure everybody gets started. So William is going to go through, today we're going to talk about HomeStyle. And we're not going to talk about 203K, so I know it's always, well, how about 203K? We're going to focus on HomeStyle. And William's going to get into the best practices, the ins and outs, and then going through an example. I think William's going to go through an example of when something went wrong and how to make sure that you're not doing that incorrectly. So, William, thank you so much for joining us today, and I'm going to let you go ahead and get started.
Thank you, Ginger, and welcome everybody. If you guys can't hear me, just type in the chat window, make sure my volume is up loud enough. I tested it and it was working, so I'm assuming it's still working. And we're going to go through some stuff specifically about what I care a lot about, which is renovation loans and the fact that they really are underutilized. And I know that a lot of sales guys are just kind of busy because the rates are low, but that doesn't actually help the customer. So we're going to talk about how to use renovation loans to actually help the customer as well as grow your business. And I'm glad you guys are here. We are part of a handful of lenders that offer the product, offer Fannie Mae HomeStyle. I think we're close to the head of the class, if not at the head of the class, for execution and delivery. Like Ginger said, this is what I've been doing for close to 15 years. I originated for about 7 years. I've been running ops for about 6 or 7 years, and now I'm in a sales management kind of role, which is still work closely with my ops to do a hefty back office to help you guys not have to deal with non-revenue generating activities, which is what of which there are a lot in the renovation loan process. So we manage that for you. So there's great opportunities here for refi and renovate as well as purchase renovations. And we're just going to go through some questions I always answer for salespeople. First, an overview of the HomeStyle product. If you're not familiar with it, I'm going to go through it. There is more training, detailed training on our website at FAMU. So you want to go there and go through a short webinar and look at all the materials that are available on FAMU or in Platinum. I'm going to go through the product details, the kind of 5 key things of sales strategy that was successful, that worked for me when I was originating, and the way that you can use to grow your business if you just take the time to do it. And that's pretty much what we're going to wrap up today. We're not going to do a comparison. We're not going to talk about the borrower benefits or the tools and resources because we're trying to keep this short. So this will be part 1. And sometime maybe we'll talk about part 2, or maybe we'll publish it and Ginger will just send it to you. It'll just be a freebie. I'll send you a little short slide deck and you'll have more information. But today we're going to try and keep you just about a half an hour. And with time for Q&A and a scenario, that probably will fill up our time. So Fannie Mae HomeStyle overview. This is Fannie Mae's solution to rehabilitate residential properties. Okay, finances the purchase or refinance plus the cost of all approved repairs. And the eligible properties are 1 to 4 unit owner occupied, and you can do second homes or 1 unit investment properties. Okay, so it's actually pretty powerful, has a much broader application than a 203K, which we're not talking about today. We could talk about that later. If you want to know about 203K, send us a message and we will schedule something in November specifically drilling into 203K. For HomeStyle renovation loans, the loan amount is always based on the as completed value. And if there's anybody on the call who's new to renovation loans, one of the questions I get all the time is, what about the appraisal? And I can tell you frankly, we have seen close to 4,000, maybe more renovation loans go through our op centers that we've managed. They were either originated by our retail sales, our wholesale partners, or we purchased them as correspondent delivery. And like less than 1% have had appraisal issues, okay? For some reason, it usually works. If they're doing enough work on the house to bring it back to market value, the appraisal supports it. So I don't worry about the appraisal. And if it doesn't work, then we have some strategies in place to renegotiate the price and reevaluate the project to get it to where we can close it, okay? So it's based on the as completed value. Don't fret about the appraisal. All the fees associated with the renovation are financed. So there's a maximum mortgage worksheet, which I will show you a sample of, which is it's required, okay? If you call me about a renovation loan and I don't mind talking to you, I'm gonna say, hang on a minute, let's get a worksheet and put your scenario in it. So if I can get you to do that yourself, then you will be a better salesperson and you will communicate more accurately with more knowledge and sort of gravitas to your borrowers. And if you're in a competitive market, they're shopping you with somebody else for the same product, odds are likely the other guy did not explain the renovation loan to them to the depth that you did, which would demonstrate your expertise and knowledge about the product, hence making you the better choice for the partnership of sales and origination. Okay, so that's the worksheet. It's going to be title updates, inspections, construction project manager's fee. That's all coded on the worksheet. And it's the plug and play worksheet that I built with my ops manager. It's Excel, and all the formulas work. Okay, and you have to sort of use that to really be able to gather the information for the financials of a renovation loan. Right, and so that is really important. All the work has to be completed within 180 days, 6 months from settlement, and so far that's about where our home styles are coming in. We've done some big jobs. They're all finishing right around 6, maybe 7 months, but most of them are finishing in much better time frame than our 203Ks. Not exactly sure why that is, but we're liking it. So this is what I call nuts and bolts about the product. Okay, we're going to be a minimum 620. All of these information I'm giving you here, this is a high-level overview of our product guidelines, also available on Platinum or on FAMU. Please get it and review it so that you're comfortable and you know what you're selling. Minimum FICO 620 allows non-occupying co-borrowers. There's no minimum in repairs, and the borrower may include a mortgage payment reserve of up to 6 months full PITIA if there's association dues if the house is uninhabitable. And we will add that to their renovation escrow and pay it from their escrow account to their mortgage account on a monthly basis for however many months they do that. We manage all the draws and the draw administration and the funds distribution in-house, so we can control that, and it makes for a much better experience for the borrower. We only do you approve eligible because I'm delivering this to Fannie Mae, and that's a Fannie requirement. This construction project manager is also a Fannie requirement, and they do 2 important things for us. They review the builder and the project at the front end, and then they manage the documentation gathering and inspections on the back end. All right, so that's where their role comes in. That's all they do. We do not send them to the property like a 203K HUD consultant at the beginning. They're just going to get the documentation, the project, the plans, the specs, the bid, whatever, and they're going to get documentation from the contractor, and we will manage that. We recommend a 60-day purchase contract, and for those of you not familiar with the product, really the 60 days is to allow time for the work to get done with a minimum amount of drama. This is when someone does a purchase and does a purchase combined with a renovation loan, they are pretty much on mental overload from the day they sign their purchase agreement, because they have a life, they've got jobs, may have kids, they may have pets, they may have car things to do. They're trying to buy this house, get all their stuff together, and they're trying to run down contractors and get bids and figure out what they need to do. It is challenging. So a 30-day contract, we would just politely decline. We would tell you what was more realistic. But a 45 or 60-day contract we can work with, and we're going to get it done as quickly as we can. So you don't have to worry that your job is sitting on someone's desk waiting for them to pick it up. We are trying to get them done as quickly as possible, but a 60-day contract gets us, enough time to get that done. Question, how do you populate in DU? Never run a DU in Reno. It's pretty straightforward. You're going to take the amount that you calculate on the maximum mortgage worksheet, and you're going to put that on line B of the details and alterations for alterations. When you populate anything in that amount, DU will recognize it as a HomeStyle renovation loan. So the rest of your setup is exactly the same. You got to get all the data, and we'll help you figure out where to put that number. That's pretty much it. Good question. With my mouse. Okay, lost my pointer. There we go. All right, so there is an eligibility like LTV, and it's complicated because it's Fannie Mae, but this is some of your options, all right? So what you'll notice, it goes to 97% if it's a first-time home buyer, or they're refining Fannie Mae to Fannie Mae for single-family primary residence conforming loan amount. If they're not a first-time home buyer, or it's a high balance, then their LTV is going to be 95%. And these percentages are based on the as completed value. All right. So if it's a second home, they're 10% down. Third home was 2-unit or single-family investment, it's going to be 85%. And if it's a 3-unit primary residence or refinance a single-family resident investment, they're 75%. So that we have a cheat sheet that's at the top of our worksheet to help you remember that. But that just shows you some of the versatility of the product and different things to consider. This is a sample of what the worksheet looks like. We're actually going to drill into a live sample at the end of the presentation so you can see how we resolve the problem for somebody with a HomeStyle loan. But you have to use the worksheet, and the parts that are above the HomeStyle Renovation Max worksheet do not print. So this information up here is really just to aid you as a salesperson with putting the information at your home. Define first-time buyer or just not own a home at time of application. A first-time home buyer has not owned a home in 36 months but Untitled for Fannie Mae. So this is straight Fannie Mae. Okay, so everything I'm telling you is a conventional conforming 30-year guidelines apply. This just boosts the 30-year product so that it accommodates property issues. On your initial disclosure, these are auto-populated on our worksheet. You're going to disclose 5 inspections at 195. That seems to be the mid-range. We can go up, we can go down from there, and we will do that after we speak to the builder and he tells us how many inspections he needs. Of course, if it's a big job and the builder wants lots of inspections, then the borrower needs to be cognizant that they're paying for those inspections. So if the guy comes back and says he wants 10, and it's like $1,950, and the borrower says, can you do it for 7? Like, they can negotiate that because the borrower doesn't have to pay for the inspections. We disclose 5 title updates.
I'm going to interrupt you real quick, William. So what's the average as far as inspections that you usually see?
It's between 3, and we just made this change to go beyond 5. So we had capped it at 5 this year based on old Fannie Mae guidelines, and so now we can go to more. So I know we've had some big jobs where they wanted like 7, but 5 is pretty average. It's about every inspection for about every $35,000 to $45,000 worth of work for big builders. Otherwise, it's like $20,000 if it's a moderate sized builder.
The reason I ask is because obviously when they're disclosing on their loan estimate, they want to make sure and disclose appropriately with those inspections, right?
Yeah, but 5 is actually a good number because really the auditor, they don't flinch if we go from 5 to 10. But if I go from none to 5, then I have a problem with the auditor.
Exactly.
Right.
Exactly.
So 5's
okay,
kind
cool.
of,
Thank you.
Yep. All right. So you're going to do 5 title updates, we always update the title, and really we're checking to make sure the GC has paid the subs, right? That's usually our concern. So we do those prior to sending the money. Money goes out as a 2-party check or a wire to the builder. This construction loan management fee is rolled in. It's actually calculated on the worksheet. And permits, we default to 1% of the total material and labor costs as a placeholder. We don't know how much the permits are at time of origination, but the auditor does expect me to let the consumer know they are paying for permits. So we disclose 1% of whatever their material and labor costs are, and then we adjust that and redisclose. If they have an architect or an engineer, typically not on purchases because sellers aren't waiting for architects to do their drawings. But if they had one and they wanted to recover the funds they paid those professionals, they could roll that money in. And then the consultant's fee, which is also built into the worksheet. So that's all finance. They're all finance fees. They're separate from your typical admin fees, any other fees, and because these are all finance, so they're in my renovation money. They're not the fees that you associate with the conforming 30-year loan. We always get a full appraisal, period. There's no desk reviews, there's none of that stuff. And it has to establish an after improved value of the property. So it's always going to be an as-built subject to appraisal. And we order the appraisal once we're ready. Okay, please do not order the appraisal like a typical conventional 30-year loan right after you get your purchase agreement. Or even if you have a bid, please let us review the bid, work with the borrower, make sure we order the right appraisal. It actually saves time that way. Because if you order the wrong appraisal, then Humpty Dumpty just fell off the wall and it's difficult. So let's talk about some sales strategies. You guys are all salespeople on the line. Another question popped in, ADU are okay. Yes, ADUs are okay. I actually sent you guys a message. Maybe I haven't sent one to you, but they're very much okay. You can build freestanding ADUs. An ADU is an accessory dwelling unit, granny suite, whatever they call them. It can be freestanding. They just have to match the local municipality requirements. All right.
So William, did you get the first question to define first-time home buyer?
I did define a first-time home buyer, yes.
Okay, good.
Yep. So the first thing for being successful with this product is you got to sell it to people, right? You got to bring it up in the conversation. And I always found it really helpful to explain it to everybody that I talk to, and even run a hypothetical purchase scenario for every pre-qual you do. It makes them better shoppers. It gives them more options. Okay, and this study that Fannie Mae did showed that the average homeowner is totally unaware of the product, and the people that Fannie Mae talked to who were homeowners who were trying to figure out how to get the money to fix up the house that they had bought in the last 12 to 18 months. They wished they had known about HomeStyle. Okay, and they were actually kind of ticked off that neither their loan officer nor their realtor in particular had mentioned it to them. So we're telling you so you can be ahead of that, okay? They may not want to do it, perfectly fine, but I do know from experience that if I tell 10 people about HomeStyle, I'm going to get 2 or 3 phone calls from people that those 10 people know. And I may not still get a HomeStyle from those 3 people that call me, but I might get another kind of loan, okay? So the idea is to get your phone to ring. So let your customers know this is an option. And I'll show you how to do the hypothetical purchase scenario. It's really fast, and the more you do them, the better you get at it, and your customers will appreciate it. You create a budget for every borrower. That's part of the hypothetical scenario, because the problem we have with renovation loans is when someone's shopping for a house and they see a house that maybe needs a roof, or they want to update the kitchen, or the rugs need to be replaced with hardwood floors or something, they have no idea how much it costs. And so what happens in that scenario, in my experience, is they kind of go down this rabbit hole of, I got to figure out how much I got to get a contractor out here because I don't know how much it's going to cost. And you can hear this cash register ringing in the background of their brain because they have no idea. But if you have pre-qualified me, say I'm a $400,000 borrower, that's my number, that's the mortgage that I can qualify for, and I'm comfortable with that payment. And then you took 10 minutes and said, William, you know, there's good value in the market. You may be able to find a deal. So let me show you if you got 10 minutes, and I'll show you how you can create a budget for renovations or upgrades or modernizing, fixing up the house that you find to make it your dream home. And then I do the worksheet, and I say, hypothetically, you find a house and you write your offer for $275, and I show them on the worksheet, William, you have $125,000 as a budget to make changes to the house. So now when I'm looking at the house, it's on sale for $325. It's basically in good shape, but it's kind of dated. I need to redo the kitchen, maybe change the flooring, update a couple bathrooms. You know, my question is not how much will it cost so much as can I do these things for $125,000? And yes. Okay, so then I can write my offer. All right. So that's the budget. And it makes a huge difference in the borrower's mind and their ability to shop. And you've also explained the loan to them. And I guarantee you they have told their close associates about this loan they're going to get that lets them buy a fixer-upper. Okay, but if you don't tell them, they don't know. So you've got to be willing to have that conversation. It does compare when you get people call you for rate and term. You know, rates have been low. People have been doing a lot of refis. Someone calls you up. They want to do a rate and term. They want to do a cash out. Ask them what the cash is for. A lot of times they're going to fix up their house. So if they're going to fix up their house, either with a cash out or they may thinking about a HELOC, have a conversation with them. Because if you compare it to a cash out HomeStyle renovation, it provides more money. Okay, it's a fixed rate versus the HELOC. All right, and it's really good for borrowers that have limited equity. Like there's no seasoning, so someone could have bought their house yesterday or earlier this year and decided that now they want to update their kitchen. They could refinance to a HomeStyle. There's no seasoning required. Okay, so they have no equity, or there's a lot of people, you know, in the news, Americans are sitting on a lot of equity, and because they watched what happened about, you know, back 2008, 2009. And prior, they're not really willing to pull that equity out of their house and do something else with it, including fixing up their house. So they may be willing to do a HomeStyle, guard their equity, increase it, right, and still have a fixed rate mortgage. And the other thing is that we are involved to assist the homeowner. So if they want support from the lender, then we're here. Like they will have a dedicated escrow administrator, draw administrator, who will be their person during the entire course of their renovation. And so there's a process built in place, which is for some people is a little more secure, gives them a little more confidence than just dealing with a contractor one-on-one out in the open marketplace. Okay, so then you have to be prepared for the rate conversation. I get this all the time. HomeStyle rates are generally higher than the typical conforming 30-year rate because it's not an apples-to-apple comparison. This loan really is a solution to property issues. And it's not generally the borrower's final mortgage. A good percentage of our people, at least in my experience in the last 15 years, will refinance after their renovations are complete, oftentimes leveraging their equity to pay their closing costs and prepaids and everything, and they'll refi to a lower rate. Okay, they got the house. That's the first part. That's what HomeStyle's for. It's to get the house in the condition you want in a reasonable amount of time at a reasonable cost. Once they've done that, they can then refinance to a lower rate to manage their payment. So the question on the origination is, can you make the payment at the higher rate? And if you can, then you can do the loan, right? And if you can't, then it's difficult. So this really works when the property is less than desirable, or it's ineligible for conventional financing, or it fails the appraisal, and the seller's not making the repairs. It fits those solutions. Okay, so one of the reasons the rate is higher is there's no collateral until the renovations are complete. So we all understand that the house is the collateral for the money I lend you, but on a renovation loan, as a lender and secondary market, I don't really have a house until the renovations are complete. Okay, so the rate is higher because the risk is higher. In addition, it takes dedicated specialists, people that just do this, to really execute and provide a high level of service for you, your borrower, the contractors, the realtors, everybody involved. All right, so the average is 1 to 1.5 points higher. They may include a discount point. You can see all that on the rate sheet. But you need to prepare and expect that the borrower may refi to a lower rate once the renovations are complete. So don't lose track of them, because if you lose them, you lose the second deal. Okay, and it's maybe like 9 months, a year later. So don't lose track of your borrower if you want to be there to help them refinance to get their sort of permanent rate. So here's a scenario. This case study, this actually I'm working on this now. It happened yesterday. John, our borrower, called Amy, a loan officer, because he was in the middle of a renovation remodel and he ran out of money to finish. Okay, so he went to do a home equity line and the bank said, you can't do a home equity line on a house that's torn up. We can't appraise it. All right, so he calls Amy, and the first thing she does is she completes the maximum mortgage worksheet while explaining it to John. He decides to proceed with the loan application. She gets the deal. He gets his project is funded. He can complete the remodel. This is actually pretty common. We see this, I don't know, once, twice a month. People get in over their head. It costs more than they thought, or something came up. They don't have the money, whatever. Or they find out about HomeStyle and they decide rather than pull it out of their 401k with penalties and all the stuff that goes along with that, that they would just do the renovation loan so they could refi to a renovation loan. I'm going to show you John's worksheet, and I can field questions on that if you have any. And then I think Ginger is going to wrap us up. Okay, so this was our short summary to help you guys as salespeople focus on revenue generating activities. And this one is revenue generating because this is the anchor for the loan. This lets the borrower know that you know what you're talking about. So this is our worksheet. It's available on FAMU. I might also be available on Platinum, so you can download it. When you download it, it will have a yellow bar at the top that says Enable Editing. Please enable editing or save it to your computer so that you can edit it. The only places you can type on this are in the yellow boxes, and they have to all be complete. These 4 boxes are critical because they turn on formulas in the bottom of the worksheet. So we have a 95% LTV because it is just a refi, primary residence.
And just to reiterate on that too, William, all the calculations are already included in this worksheet.
Yes.
So you want to use this worksheet, and it's going to be based on the information you put out. So, when you put in whatever it is, whether it's a purchase or rate and term, it's going to know what your maximum LTV is. It's going to tell you what your costs are going to be. So you want to make sure and use this worksheet.
Yes, please use the worksheet. This max mortgage amount is actually your conforming limit or high balance, whichever you're using. So you have to put that in. There's a drop down here, yes or no for a purchase. This is a refi, so no, not a purchase. These 2 numbers need to equal 100, at least on your first calculation. And if it's a purchase and the borrower wants to put 20% down, I recommend you still do 95 and 5. And then after you complete the worksheet, go back and change it to 20. Then you can see how their cash to close changes, okay? That just seems to work better. So he called Amy yesterday. It's his primary residence, so we've checked all the yellow boxes. His payoff is $75,000. He thinks when it's done, it'll be worth $400, but he needs $175 to get there, okay? So we have a 10% contingency reserve, and we always have at least a 10% reserve. We'll have a 15% if the mechanicals are not working, but I have a bid to repair them, okay? So there's 15, but this one's 10 because it was his house. He was living in it while he was trying to tear up his kitchen and add rooms to it. There's no architect or engineer's fees. He's already paid them. He hasn't decided yet if he wants to include those in his loan or not. He's already paid his architect. The consultant fee you can see is hard-coded. So these are all hard-coded. Everything in white populates automatically. And it will, when you load the worksheet, it will start with 5 at 195 plus 200 for the appraisers, 1004D, because I have to send them at the end per Fannie Mae, and then 5 title updates. And then we will edit this when it's in processing to figure out exactly how many inspections, how many title updates. Permits will default to 1%, as I said, of the hard cost. Okay, so there is your, and if they needed to escrow payment reserve, you could put in how many months. You'll have to calculate the PITI on your calculator like old school and put that in here, which will increase the alterations and repairs escrow. Okay, so there's that. Task completed, he says 400,000. He doesn't need an EMI. His loan amount is 279,100. That's the 75 payoff plus the 196,400. So here's the refi we're paying off. We put in some prepaids and closing costs. His total cost then 279,100, and he's bringing nothing. Okay, he's going to pay for his appraisal, and it's probably going to be $100 more than a typical appraisal. And other than that, and his rate may be, like I said, maybe a point, half point higher. You may have to pay a point. We haven't priced it yet, but we're going to escrow 196,400 for him. All right, so we explained that to him. He thought it was a good deal. He's in the process of lining up, getting his documents to us so that we could then underwrite his loan. I got a couple questions I want to answer, and then I think I'm going to hand it over to Ginger. If you guys have other questions, hand them in. But on an ADU,
yeah, so type in your questions too. So you're going to read through the questions because it looks like there's a few of them, William, especially on the early loan payoff. So that's the main thing as far as what's that early loan payoff.
Yep. So the early loan payoff is, let's see, what is the refi after HomeStyle loan? The early payoff is 180 days. It's set by the secondary market. So 6 months from closing. Okay. Do not let your borrower refi before 6 months. And most of them aren't even done. I mean, maybe a small job's not being done, but most of our home styles are taking about 7 months to get done, 5 months. So you want to make sure it's 180 days. Follows this regular rules.
What happens if it isn't? So William, just about that, because we have another question. If the borrower refinances in less than 6 months, then are they required to give any commission back? So is there going to be a penalty then for the early loan payoff?
There is a penalty for early loan payoff, but I'm not sure in the wholesale realm how it's structured. I know in retail, they lose the commission, there's fees, and there's fines. And the managers on the retail side sometimes can negotiate with secondary market if they couldn't control it. Like if it wasn't, they didn't refi it. But I know that the fees and penalties are driven by the secondary market. So you just want to make sure Then you have that conversation with your borrower. They need to make 6 payments, and then they can refi. And then that usually covers it. Okay, so high balance loan amounts are eligible. You can do HomeStyle to high balance. That is correct. You can do HomeStyle up to 726, 525. Question: do you require a GC to manage the project, or can the borrower self-manage? If the borrower is a GC, can they self-manage? Generally not. Fannie Mae requires a general contractor to be involved. So that's a Fannie requirement, 1 GC. And we don't really do self-help. So because the borrower that's a GC doesn't make his money being a GC for his house, he makes his money being a GC for other houses that people pay him to do. And generally, in our experience, we'd like to do that, but what typically happens is the guy works 40, 60 hours a week. He comes home on the weekend. He doesn't get anything done on his house. Or if he's trying to be the GC, he's not at his house. He's at another job. So generally, we want a separate person. On an ADU, do the plans have to be approved before funding? Yes, period. We don't close anything that's going to be built until we have plans and specs to know what's going to be built. I can't even get an appraisal if I don't know what it is. So I need everything will be done as part of the process. That's partially why it takes 60 days. But we get all the plans and specs, and that's what we base the appraisal on. GC on an investment property might be the guy buying it too. Yeah, he might be. It might be difficult because it's just going to be hard. So I don't really have any clear answers for you. We've tried that in the past. Like I said, I've been doing this for a long time, and 9 out of 10 times I tried it, I got burned. So I don't have any appetite for it. So, on a case-by-case basis, we maybe could talk about it, but it's going to be an uphill climb. It just doesn't usually work. And Ginger, it looks like that's all the questions that I have.
Awesome. Well, great webinar. Thank you so much for everyone for attending. We do have a question from Kenny wanting to know if we are recording. Yes, we always record our webinars, and I always send out a copy of the webinars. I'll also send a copy of the PowerPoint, and then I'm going to send out a copy of the worksheet that William went through. So you'll get that in an email tomorrow. It'll come tomorrow afternoon. So look for that. And if you have any additional questions, please contact your Finance of America account executive, and they can help you to be able to get your questions answered on a Fannie Mae HomeStyle. So William, thank you so much. Thank you for all of you who attended, and wish you a great rest of the week and happy Halloween. That's coming up this week too.
Thanks, Ginger. Thanks, everybody. Appreciate you taking time to join us.
Awesome. Thank you. Take care.